Hi, Dan. It's Trevor.
Good morning, Trevor.
Hi.
Let me just give you control.
Okay.
Okie dokie, you should have the power. You should be able to show your screen now. Okay, we're looking at, hang on, Euro USD weekly. Is that right?
Yes, that's okay.
Excellent.
That's
Well,
we'll start. Actually, we'll start with that. Yeah.
RIG.
Yes.
We're looking at now. Oh, it's all over the place. Okay, it's I make it 8:59. So let's give him a minute and we can get started at the top of the hour. Okay. Okay, I make it 9 o'clock. Trevor, you ready to get started?
Ready to go.
Okay, hello everyone, and welcome to another technical analysis webinar with Trevor Neil. Thank you for joining us. As always, we'll aim to get through everything in approximately 30 minutes. If you have any questions for Trevor, you can ask them in the questions tab of the GoToWebinar control panel, and I'll pass those over to him. We remind you that this webinar will be posted to our YouTube channel in a few hours' time. So if you'd like to watch it again, you can do so there. And we'd love it if you'd also subscribe to our channel and click on the bell to get notified. The handouts for today's webinar can be downloaded in the handouts tab in the GoToWebinar control panel. So if you're having any problems locating or downloading them, please just let me know and I'll send you a link and you can download them that way. The first is a guide to the different technical terms that Trevor uses when he's conducting the webinar. And the second is a CFD guide, which details the different products that we offer at FXChoice. If you're watching on YouTube, these handouts will be available in the description box just below the video. For those of you who don't know Trevor, he has over 40 years experience as a technical analyst and trader and was global head of technical analysis at Bloomberg. So Trevor, over to you, sir.
Okay, thank you very much, Dan. Welcome everybody. And yes, I encourage you to ask any questions. Stop me if I'm not clear, and if there's any securities you want me to cover. But I'm going to cover, certainly I'm going to talk about the currencies and the dollar, precious metals. We're going to talk about the cryptocurrencies. We're going to talk about crude oil and stock indices as well. So that's our program for today. But the big thing I want to talk about today is this dollar move. We've had this dollar weakness, but it stalled a bit. But let's just have a look at the technical reason behind that. Now, normally we look at the euro to describe the dollar. Because the euro is such a big trade partner with the dollar and probably best reflects it. But the best way to see it is looking at a US dollar basket. So this is a basket of the major economies trade weighted. The euro is 45% of the basket. And so it's heavily weighted. The chart looks very much like the inverse of the euro. So this going down here is dollar weakness. So what we had been talking about is the weakness of the dollar, and then this bounce at 90, we'll call it 90, the round number, and then the failure at a lower high, continuing this pattern down, and now retesting it here. Now, this is a very, very important level, and I'm going to show you that in the context of a very long-term chart. Here's where we are now. Here's the lows that we're testing from the end of last year and the beginning of this year. But then at 89, we've got this low here. And so we're very close to two very important lows. And there's not much sign of it stopping. I know today it's the euro's a little bit weaker and gold's a little bit weaker and the dollar's reflecting the dollar. But look at the context of this and the absolute incredible importance of it. If we break through this, I call it 89, it's more than 89, it's 88 and a half, really going down. But if we break that level, then there's nothing, because this surge here that we had in 2014 was very fast indeed, but there's nothing until we get down to sort of 83 level here. So how does that translate into the euro? These are very high readings for the euro and the sterling and so forth. So this is really why we must concentrate because it has profound implication for everything we're doing. And this could really, this break could really accelerate the commodities boom, the oil and the gold, and of course the currencies versus the dollar and the stock market itself as well. But here we are flirting with this low here and with the prospect of this low here. So let me go back to 2 years on this, otherwise it messes things up for the future. So think of this here as low, lower low, same low. So what we'll see when we look at the euro is high, higher high, same high. And that's what we are seeing, high, higher high, higher high, same high. So it's the inverse of what we were just looking at there because it's such a big component of the dollar index. So this is what we're testing at the moment and just sort of just hesitating at that high as you might expect. It's still steady in the RSI, the MACD is still positive. Going to the daily, we've got resistance, which is only light, I would say, here at 122.66, but we've got resistance from January at 123, and then the 2017 high at 126. So the all of this looks, I know it's slightly weakened off here, but you know we're still in an upward pattern, tackling a very significant resistance point. And of course we can fail. We can fail. It would be a logical place for it to fail, but it doesn't seem like it. It does seem as though it's steady and ready to make the break, and then wait for explosions after those breaks. Now, I mean, I use that word advisedly, you know, because the level is these levels, two levels that we're coming up to in the dollar are so important. Now, this does mean that everybody knows how important they are, including the Federal Reserve, who I know are charters, and they will know the psychological significance of this giving way. And so you might, you know, they don't mind the dollar easing, but they want it to be orderly. Well, it could become disorderly if that happens, and all the talk will be on the size of the US deficit, and can they service that debt? Will people keep buying that debt? Can they keep exporting that debt, and inflation? All those worries will come into play. So US dollar, is that the best thing? Now to make a choice here, we look at the relative rotation graphs, and the regulars here will be very familiar with this, but very briefly what this is plotting the G10 currencies versus the relative versus the US dollar. The US dollar is in the middle. Anything to the right of it is outperforming the US dollar, and so furthest to the right currently is the pound. It was the Canadian dollar, you'll remember when we looked at it last week. That's the Canadian dollar there. So the Canadian dollar has fallen away to undertake, if you like, the British pound here, which was previously second. So furthest to the right is strongest, weakest is the Norwegian crown. On the vertical axis here, the highest, which is the New Zealand dollar, is with positive momentum. And the New Zealand dollar is the only one which is heading, you see its latest heading compared to last week's sample is northeasterly. And northeasterly, easterly means it's increasing in outperformance, northerly with positive momentum. All these ones here, which are further to the right, more outperforming, but are losing positive momentum there. So the conclusion from this picture is the best security to hold versus the dollar is the pound, then the Canadian dollar, then the Swedish crown, and there's the euro here. But they're all good. They're all quite outperforming the US dollar. Worse, the Australian dollar, surprisingly separate from the Canadian dollar, Japanese yen, and the Norwegian crown over here. The New Zealand dollar has the most sort of interesting direction, although it's a bit early to say too much about it because it's got the most positive momentum in it. So going back now to the absolute graph, so we know where the euro is in that scaling, but let's go to the pound. Here, and here's the weekly chart firstly of the pound, making a nice rhythmical climb here, just easing back very slightly this morning on this dollar hesitation. They're at that very important level. So this is why this is looking just a little bit of a stall here. But look at the power of this one here. The February high at 142.30 is under threat. You can't see it here. Let me bring it in. I'll bring it 10 years worth of data. So these big double tops, well, the February high here, which was never, is not a serious resistance level, and I wouldn't expect it to really cause the market much trouble, but that's under threat at the moment. But much more significantly is the double tops at 143 from 2018. That's a very formidable double top pattern there, which gave us this drop, which lasted for 3 years. Now we're coming up ready to test this. This is really a very exciting chart here, and got a lot of momentum on the upside. Some resistance levels very close together, which are under threat, and then we should manage to push higher, much higher from that. So again, let me just change this back to the 2-year chart and go back to the daily. So on the daily chart, we've got this rising lows pattern here in the daily chart, which is constructive. Resistance of 142.33, support at 140, the round number of that high and these lows here, and also at 136.80 as well. So this one here. So this is looking bullish. It has got momentum. I know the last couple of bars have not been that good, but that's just part of the zigzagging pattern here. So far, it hasn't developed into any significant top, and it is, after all, testing very important levels. But the move that follows that breakout upwards could be very fast and furious, I suggest. The Canadian dollar, which was our favorite before, and has moved back, what was it, to second place, or what was it? Well, it's flattened out here. So I'm going to show you the weekly chart of that. And I want to show you the long-term chart, because this is why I think this could be very big one. So look at this here now. This is the dollar weakening, the Canadian dollar strengthening, broke this significant support level. This level here, was from 2017. The low was at 120.57, and we're really at it now. If there is another low here, but look at this here. We moved up there so fast. There's really no support down, right down here, around to about 110 area here. So again, extremely threatening chart here for an explosive move. So I think that this could actually swing and be the leader once again to resume that role. But at the moment on the daily chart, it's hesitating. The Bollinger Bands here are squeezing up here with the low volatility, possibly indicating an impending breakout type move. Hopefully it's a break down and not a break up. The RSI has risen through this pattern here, and the MACD is also positive too. So it's not breaking yet, but we've got the levels, haven't we? The short-term level would be here at 120, that big round number there. So watch out here, some very important levels, and let's make sure we're in the right place to make the most of the move if it develops as we're expecting. Any more currencies? I'm going to go on to the cryptos in a second.
Trevor, yes, we do. We do have a request to have a look at the British pound Japanese yen chart, please. That's from DC. Thanks for your request.
Okay. Now remember, just before I do that, I'll go back to the RRG chart. So we've got the British pound over here and the Japanese yen chart over here. So we like the pound, we don't like the yen, because we've got a weak dollar and we've got the Japanese yen even weaker. So here it is here. Okay, so there it is here now. So this is going up. That means the pound outperforming the yen. Looking at the weekly chart firstly, yeah, look at that. The yen has been stubbornly stagnant for a long time, and the pound has been steady, and that is reflected here. Still looking strong. That's a good pair to choose, an aggressive pair to choose, because you've got pound, which is staying, amongst the elite group furthest on the right on RRG, and the yen being the staying on the left-hand side over there, just cannot improve against the dollar. It's with the dollar correlating or worse is what it's doing. So it's a very good pair to have an aggressive play on this. So here it is, and that's the reward you're getting from holding that pair. At this moment, we're having a little bit of a pullback. We've pulled back, the RSI has pulled back below 50. In this strong uptrend here, we've got an ADX of 30 telling us the trend is strong. We're having a weak pullback. I think it is a weak pullback. And so if you weren't in it, some people would consider this as a setup for a re-entry level or an add to position level, another pause like this one or this one prior to another impulse move in the direction of the trend. The trend is very strong, so I don't expect that this pullback will last too much longer. Yeah, so if, depending on your position, your attitude to risk, this could be considered an opportunity. Any others before we move to the cryptos?
No, that's it. Thank you.
Okay. All right. Well, we have had a terrible crash in the cryptos, and even with the weak dollar, the cryptos are underperforming the dollar, so they're really worse than the dollar. So here is the dollar and here I've got Ethereum, Bitcoin, and Litecoin, the worst of all here. They are all in the improving quadrant, so they're getting less bad. They're actually stabilizing, as you'll see from the charts themselves. And some of them setting up for potentially quite an interesting bullish pattern. I'll come to that in a moment. Some of them, not all of them, but they're all from a sort of very battered position. So I think that I'd like to go through them not in the usual order where I start with Bitcoin, because it's usually the biggest. I'd like to start with Litecoin, go to Bitcoin, and then to Ethereum. The reason being is the worst, better, best sort of charts. So starting there, therefore, with Litecoin. So on the weekly chart of Litecoin, we plunged beyond 61.8. That's sort of catastrophic pullback to have in a bull market, and really means it's going to be very, very hard to go up. And of the three, it's the one that's been most reluctant to rally, and the rally itself looks rather weak and not very convincing. That's the weekly chart, of course. Here on the daily chart, we've got this, you call it a wedge or a symmetrical triangle. We're moving towards the apex of it, but it is very skinny triangle. That means that if it breaks, whenever it breaks upside, the minimum price objective is 240, 250 if it's up, and if it's down, it's back to or beyond the low here. So not a big count out of that pattern there. So this is not an attractive looking chart to me anyway. But if we go now to Bitcoin, we've got a similar consolidation pattern. So let's look at the weekly chart firstly. So come back, and now here we came back not 61.8%, less than 50%, in around 50%, stabilizing at 36,000, this consolidation here, and we're making another little triangular shape here. Seem to have lost my lines on that. So we've got this consolidation going on here, small consolidation here. Again, looking like it could make a move, a small move, which could take us back up either to retest the resistance at 48,000 or down to 26,000, something like that, if we break down from it there. But again, not really a very attractive looking chart there. It's just stabilizing at quite a good place and a better place than Litecoin. But going to Ethereum, we have a more constructive sort of consolidation going on here. So looking at the weekly of the Ethereum, you see here it came back to 61.8 very, very briefly, picked up support very impressively from this important support level here, which we'd always said during this parabolic part of the move, you know, it was a long way down, but that was where the first support came in. Well, it held at the first support, 2000 also the round number, and it's stabilized and advanced quite a lot since then, nearly 50% since then. So this is a better performer than the other ones. But the short-term message in here, the consolidation here, is not a narrow wedgie pattern. This is an ascending triangle. So we're moving inside this. It's got more or less a horizontal top on it here, and let's say at 2,900 for the breakout on the upside. We've got this higher lows pattern. Every time it pulls back, the buyers are buying more aggressively, and the sellers have got a line in the sand here, which is under threat. If this breaks, then we measure the height of this pattern here, and that would take us up 1, 2, 3, 4, 5, 6, nearly 6.5. 1, 2, 5, 6, right back to this high here of the middle of May, high here. And so I'm quite excited about that. I'm going to watch this carefully. The indicators are looking good. The RSI is holding up positively. The MACD is too. And so watch for the breach. Because this line is quite horizontal, the breakouts are often impulsive, you know, gaps, long bars, close at the extreme, high volume. Those are characteristics that we would expect on a break like this. And the move from here to here could be very quick. Yeah. So of the three graphs, the one that is the best looking on the RRG chart has also got the best absolute chart as well. So I'm watching this one closely. I'm going to not spread my cash. I'm going to concentrate it and do it where I think it looks best, because the Litecoin just doesn't look good at all. It's a different chart completely. Now moving to gold. Gold suffered slightly from the dollar stopping, and so we had this sell-off here on Thursday, and then it stabilized pretty quickly. From a chart point of view, we had a first visit below 50% for a long time here, and it seems to be holding here. So on the logic, again, that this is a strong market, the MACD is strongly up here, and it's approaching these resistances, one at 1950 resistance, 2000, and then of course the all-time high itself. As we're challenging them, of course, it's a zigzagging pattern, but on this pullback here, we didn't get below 50%. On this pullback, we just got below 50%, and here now, we've just got below 50% again. So I think this is an opportunity to reload. If you've sold out, taken some profits on the position last week because it was a good run, you hoping for a place to replace them. If we start to steady up here, I'd have no hesitation in rejoining this or adding to positions if I am long of it, buy on the dips, if you like. And this looks like one of those rare dips that we're getting in this market. The gold-silver ratio is still telling us that we should stick with gold. Generally, it's steadier of the two. This rising value here, this is gold divided by silver, means that gold is preferable, but it's not a strong message. You could buy either, but gold is a little bit stronger than silver. But I also like to look at gold versus the S&P, because this is at such an important level. So this is gold divided by the S&P, I hope. Well, decided not to come up. Not sure. Oh, too long the data. That's why. Let's go back to 2 years. Okay, lost patience. I'm not going to look. But the important thing is, and we saw this yesterday, very, 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 I mean, decade-long support level has been tested and bounced again. And so the message is that where gold has underperformed the stock market for such a long period of time, it's now stabilizing and bouncing, and that gold will come to its own again to outperform the stock market, which is sort of finding it harder to move up, whereas you've got a very strong pattern here in gold. Sorry about that chart not appearing. It did appear a minute ago when I was preparing.
Trevor,
Okay,
can you hear me?
Yeah.
Trevor.
Go ahead. Yes, sorry.
Sorry, yeah, we've had a request to take a look at silver, please.
Yeah, okay. So I preferred gold to silver, as you know, but silver is also looking good. There isn't a lot to choose between the two of them. What you've got here is, whereas you are making new ground, new high ground, new recent high ground in gold, you're not doing that yet on silver. Silver, we've got two very clear highs at 29.80. Let's call it $30 there, which will be very important level to clear. We've got a rising lows pattern. I can't draw a trend line to make it a ascending triangle, but the message is the same. Every time there's a pullback, the buyers are more aggressive on the pullback. The pullback was 38.2%, and that's the fact that it stabilizes at a high reading is very bullish for the next leg, which we're on now. The resistance between here and that $30 high is not strong. You see there are only really shadows up here, so it should keep on going upwards. And not find it too difficult, but it is flat, relatively flat at the moment, but watch out for those breaks of those highs, and the pattern itself is very good. I wouldn't mind either, just slightly prefer gold. They're both looking good, and the pattern of rising lows is good, and just slightly more strength in the gold than the silver. Okay, I'm just going to cheekily have another go at this gold S&P. See if it's going to be good to me. Yes, it is now.
It's behaving.
Sorry?
It's behaving.
It's behaving. Yes, it is. And I do want to show you that long period. Here it is here now, and the significance of it. So you see here, I've drawn this line. So it should be a very thick line, but we've got this high here from 2002. We had the breakout here in 2005, the revisit in 2006, revisit again in 2007. Years of gold being better than the S&P, then not for years from 2011 down to retesting in 2018, this level at 120 again, then outperformance there, then underperformance, very strong underperformance when the gold was really hopeless and the stock market was so strong. But here we bounced again, and that's what I think is happening now, is that the stock market itself is losing upside momentum. It's the S&P, and the gold is strong. So I like this ratio here, and you see the importance, the multi-decade importance of that. Thank you, Refinitiv, for coming back to life for me. Going on to Brent crude oil. Well, Brent crude oil is doing well. 30-month highs, I think we saw last week on it. It is looking really good. Rising lows pattern here. The breaking of the $70 was a little bit of a problem for it, but we've now cleared that, and the MACD is positive. The RSI is looking positive. It's all looking positive here. But let's refresh our memory of the big picture here. So we've got these 1, 2, 3 tops that we're at 71.5 or 72 that we're testing now. And if we can clear those, and we are moving pretty purposefully towards it, then look at this pattern here. So then we'll be looking to test the 85 level, and then from 85 to 95, let's say, there's nothing to stop it. There's no friction at all. That fall was so fast, it just plummeted. We were going down $4 or $5 a day, day after day in that period there, and it was, so we're, it's looking again like it could be exceptionally bullish chart here. we're close to breaking this level. This 75 level is not strong. 85 is strong support, but it was very briefly held, and between 85 and 95 is I would say, if we get through the 85, we'll go to 95 very quickly after that. So lots of potential in this chart here, and very much a lot of momentum in it as well to the upside. So another exciting chart. Okay, I'm going to move on to the stock indices now, if that's okay. We're losing a lot of momentum in these, a lot of power of the trend itself. So as I go through these, I'm going to draw your attention to the ADX readings, which are all now quite low. So that's a measure of the presence of a trend in the market. Anything above 20 or 25 is considered to be trendy, and of course the trend has been up in these markets, and but it's lost a lot of power. The best looking one, luckily, not luckily, but through great skill on our part, we recognize as the best opportunity is the German 30 index. But let's go start, as we always do, with the S&P, then we'll go to the NASDAQ. So here is the S&P, not looking bad, of course. There's the weekly chart, powering ahead very, very strongly. But let's look in at this latest action here. It's flattening out quite a lot here. And it is because we've got many stocks that are really, some of the stocks are looking quite ill in the S&P 500. And it's not being driven by the upwards as it was before by the technology, the FANG stocks. The FANG stocks themselves split up. Some of them are good, and so Facebook's good, and some of them are not good at all. So it's flattened out here. We've got resistance at the high here at 4238, and it looks as though we're steady at the moment here. There's nothing really terribly wrong with this chart, except that it's not going up. It's rather flat. It probably will go up, but is it really the best place to be? That has always been an easy question to answer. Yes. There was nowhere other than America to be long of the stock market, but this is not the case now. Now looking at the NASDAQ, the Tech 100, here again, let me show you the weekly chart here. Here we've got quite an iffy looking chart here, a high, a higher high, but then failure. Here, people might talk about this as a wedge. We had the bearish divergence in the RSI, a bit of a warning that this didn't have momentum to it here. So wedge is a topping pattern. It's not completed yet, and we haven't broken down from it yet. But the failure at that high in the way that it did do, not surge to a new high as it breaks the high like we're used to happening, is a sign of weakness. And that's because we've got quite a few stocks in the NASDAQ which are actually weak, not strong. They've really split up a lot. So whereas you had high number, thing that I do is measure how many constituents of the 100 are, and the S&P 500 as a percentage are above their 50-day moving average, the individual components, and the 200-day moving average. And that number in both cases has fallen down a lot, but particularly in the NASDAQ here. It's the constituents, the breadth of it has weakened off substantially. And moving to the FTSE. So here we've got the weekly chart of the FTSE. Now the FTSE, as I've been warning, has come up to an area where there is substantial resistance. We spent a long period of time here. Let me just show you a longer chart here. Look at this range here. This range from 2017 to, it was more than 2 years long. We traded in this range. We've come up into it now. I would be surprised if it finds it easy to go through that. That is a big level, big wall of resistance. So I personally expect that this will start to find it difficult to push forward and lag the other indices. We did recognize that this sharp fall here, should mean that we would go up relatively easy, but we did also recognize that this level, this resistance level here was very, very substantial level, a multi-year pattern. The chart itself is, it's been kind of flat. We're still generally going up with higher highs here, but it's losing power, a lot of power, and I do expect this one to start to lag the other indices. Now, I haven't mentioned the ADX having done the first two indices. The FTSE has got an ADX of 15. So remember, 20 to 25, this means it's a trading range market. This means it's mean reverting trading, selling the strength and buying the weakness. By trading at the Bollinger Band edges is going to be profitable, and taking your profits at the moving average, which has been the case here. It's just not got the powerful trend to it. Going back, I'll just show you very quickly the S&P ADX is at 13, a very low reading. Flat is what it's telling you. NASDAQ is reading 12.9, a very low reading. All of these are not good investments. You need a good positive weekly MACD and a nice high ADX reading to tell you you've got a strong uptrend in here. We haven't got that. Now moving to the German 30, here we are making new highs. Let's look at the weekly here. And look at this, isn't like the FTSE with all that resistance above it. We're in blue sky here, and we're powering ahead strongly. I did notice, draw your attention to when we were in this consolidation here, how we had these long lower shadows here, which meant that inside the consolidation, every time it went down, it was rejected, down, rejected, down, rejected. And so it always looked like it wanted to break up. So here now it's moving up nicely, making a new high. The indicators are all positive in this, but the ADX here is still low itself. But this one, I think, is the ADX should start to bottom out and turn up pretty quickly here, and indicate that we're on a strong trend, which really it deserves a higher ADX reading than that one. And then finally the Nikkei 225, which I have favored a lot from a long-term perspective. Now it has done terrifically. It's had a fantastic run up here, and we were bullish all through that. But now it's forming I think, flag, which is potentially a very bullish pattern, but we're inside this drifting parallel shape here. This would be the flag pole that would take us on up. There, I've shown you before, there's very long-term charts of 30 years or so, but I think we're on our way to all-time highs for this, which is still 10,000 higher than where we are now. But here we're having a pause. It's a bullish pattern, a flag like this, and so watch the top end of the flag for a resumption of the uptrend in this one, and take over lead once again, and reassert this multi-year, very strong bull market to reassert itself for an attack on the high, the all-time high. And with regard to the stocks, we're running out of time now, but I wouldn't have anything to add to what I said last week, which is the stocks that we love are Bank of America, Info, which is Market, BNP Paribas, and DBK, Deutsche Bank. All banks. These are all great looking charts, breaking to new highs, making new highs. Barclays and HSBC, I drew your attention to them and their highs. Look at Barclays is, show the weekly one on Barclays. Okay, look at this here. It's a very important level that it might be just about to break, and I think it is about to break. HSBC here too. This would be, well, at very least a reverse head and shoulders pattern, but look how fast this pull was here and how it could head up to 600 in smart order if it just makes a little bit higher move from here. So the other ones, many of the other ones have shot up, but these ones chart wise are looking setting up. But what we hate, Amazon, so FANG stocks here, some of them we hate, Alibaba, Intel, Netflix, Tesla. Watch out on Apple. So here, high, higher high, and then lower high. Ooh, head and shoulders, left shoulder, head, right shoulder, neckline, threatening the neckline here. That could really start to tumble. And then ones which do look good, some of which are FANGs. Facebook looks excellent, and also Google and Microsoft and NVIDIA as well. Just going to show you Facebook and NVIDIA. Facebook, fantastic, but NVIDIA, look at that. Okay, so that's the one that we liked the most last week, as you know. All right, Dan, do we have any questions?
No, that was it, Trevor. We actually had a request to look at the DE30, but you actually managed to cover it.
Okay. All right.
We covered that section.
Okay.
Anyway.
Well, the tone is things are going to be dominated by the dollar. The dollar is pausing at a natural place for it to pause, but it's threatening to really almost get out of control on the downside. We know using RRG where to best get the sort of catapult effect from that. Very good, whoever that was, British pound, Japanese yen pair. That's a very good pair indeed. The yen has been the worst. It's just been overtaken a bit, but probably continue to be the worst. And the pound is, sometimes it's the pound, sometimes it's the Canadian dollar, sometimes it's the euro, but furthest to the right. But to have that pair is a terrific combination currently for if you generally want to have the best and the worst as your pair. Beneficiaries of the dollar weakness, of course, will be the commodities, gold and crude oil, and in the cryptocurrencies, there's better games to play around, easier games to play, unless you're fixated with cryptocurrencies. I would go to easier places. But of the three, the Ethereum looks the most attractive chart there, and having pulled back less and also forming a bullish chart pattern currently. And then in the indices, well, they're flattening out quite a lot. The German 30 looks best of the lot, and that's the one, my favorite. And I do foresee trouble ahead for the FTSE. And banks, best, top tech stocks splitting up. There's best and worst in there. There's good ones and bad ones. Okay, all right, Dan.
Well, thank you very much, Trevor. Thank you everyone for attending. Please join us again, same time, same place next week. And don't forget that we'll be posting this webinar to our YouTube channel in a few hours or so time. So if you came later and you want to watch from the beginning, or if you just want to watch the whole thing again, or a particular piece, please head over to our YouTube channel and don't forget to subscribe and click on the bell to get notified. Okay, Trevor, anything to add as we leave?
No, nothing to add. Just watch for that dollar break, because all the moves that follow could be very sudden. It is hesitating, and it may take a week or two to do it. If it is going to do it, could fail here. But be ready. I think there's a lot of fireworks soon in the markets. Okay, Dan, thanks very much for hosting as usual. Thanks to FXChoice, and I look forward to talking to you next week on Monday. And may the trend be with you.
Cheers, Trevor. Bye, everyone.
Bye-bye.